Okay, so I'm very excited to be showing you guys the new product that we've been working on, the TokenMetrics Trading View Indicator. So here on the TokenMetrics.com website, under the pricing page, you can see a bit more details about this indicator. Essentially, we are trying to build a strategy, a long, short, or buy-sell strategy that you can apply directly on your TradingView monitor so that you can make better trading and risk management decisions. So I'm going to discuss it more in detail when I show you guys on TradingView, but just as an overview, it's going to be two style of strategies, one that is trend following and one that is mean reverting. And I will discuss a bit the differences between them. But essentially, there are multiple components that we are using on that TradingView indicator. One of them is just an adaptive cloud that is telling you on a relatively short term whether the trend is bullish or bearish. And then another component is a trend line that is more of a long-term analysis of how the trend is changing with time. And then finally, some sort of bands that will tell you resistance and support on the short term. And lastly, the signals where our model would buy and where our model would sell. So let's go ahead and show you guys on TradingView directly how that will look. So as I mentioned here, you can see I have two different indicators, one that is the Token Metrics trend following and one that is the Token Metrics mean reverting. Let's start off with trend following. This is Bitcoin, Bitcoin USD, and I'm going to put in our indicator on it. So you're going to get a visual that looks like this. As I mentioned to you guys, there are several components. First of all, you can see the green line that moves from green when there's a strong uptrend all the way back to red when there is a downtrend. So this is essentially helping you determine whether the long-term trend is bullish or bearish so that you can know when to reduce positions and when to go risk on and when to go risk off. This would be like a long-term trend, and also it could give you some support levels when there is an exponential trend. Because this sort of trend line is what we call adaptive to volatility. Whenever you see a very strong move and very strong trend, this trend line is going to be adapting to prices very fast. But when you see a period of consolidation where really no big moves is happening in terms of volatility and trend, the trend line will become flat so that we reduce the false signals that you get when you're applying trend following strategies and then you are in a range. Because when you are in a range-bound trading, trend-following strategies will tend to output false signals. So we use this to reduce the possibility of false signals. And then another thing, which is the blue bands here, that could tell you where on the short term you can expect resistance and where you can expect support. All right, so this is visually how the indicator is going to look. And then another thing is that you can get the short signals in red and then the long signals in blue, telling you where our model is going long and where our model is going short. Now, another very nice feature that we wanted to provide to you guys is the ability to see how these signals would have performed in the past. So this is the backtest. We want to show you the backtest so for full transparency, but also for you guys to learn when this model is good and when it's not, when it performs well and when it doesn't perform very well. So here, whenever you choose the Token Metrics trend following indicator, you will get the long short signals, but also you will get the backtest. So let's talk a little bit about the backtest. Here, just the net profit, as you guys know, it's just the profit that you made by following these signals. And so it gives you the overall performance here in percentage. And then it gives you the number of total trades that were made throughout this time period, the percent profitability or accuracy of these trades, and then the profit factor. Profit factor, usually anything above 1 means that it's a profitable strategy. And then when you get close to 2, it means that it's very, very good. You're making twice as much profit than losses. So anything above 1 is usually pretty good. And then you can look at the average trade and what was the return on the average trade. And obviously, max drawdown is a good metric to understand the overall riskiness of this portfolio. So when you are doing trend following strategies on a daily time frame and in crypto especially, you can expect max drawdown to be high, especially if you are trying to chase big returns like here. And if you want to reduce your max drawdown, it will also likely reduce the return if you want to be stricter on risk. And you can put in your own stop losses, which will reduce that max drawdown. Now, another very important thing here is that you can click here to see what is the performance of buying and holding this asset in the same time period as this strategy. In blue here, you see the performance of buy and hold. And in green, you see the performance of our strategy. So here you can clearly see that our strategy on Bitcoin, at least, is outperforming a lot holding. Now, if you want to dive deeper into the results and performances, you can go to the performance summary tab that is here. And when you click on it, it will show you a lot of very useful details. For example, how much money did we make on the long signals and how much money did we make on the short signals. So it divides that up. It tells you the net profit of the strategy, which here is 680%. And then it tells you that, okay, if you bought and held this asset for the same time period, your return would have been 20%. So following this strategy on this coin shows that, okay, we are outperforming a lot holding this asset. And then you can look at a lot of other metrics. For example, how accurate were the long signals compared to how accurate were the short signals, the average return on each trade for each side, and a lot of other useful metrics like what was the largest losing trade and what was the largest winning trade. And then last step of a more in-depth analysis is trade by trade. You can see what were the returns. For example, here you can see that we entered a short position at 40K, which was actually here. And then we closed the short position at 23K, giving us a return of 40%. All right, so let's go back to the overview. So this is for Bitcoin, and that's how visually this indicator is going to look in terms of trend following. One thing I want to mention is that for trend following strategies, and this one, it's best to use daily and weekly timeframes here. Anything below daily becomes very choppy and becomes a high frequency. But here we want to focus more on low frequency trend following. I would use daily and weekly for this type of indicator. And now let's look at other tokens and how this strategy would have performed. So if we look at Ethereum, profit factor is still 1.2, so that's not bad. We have a 760% overall performance. Max drawdown is relatively high, so we want to improve that in terms of risk management. But as you can see, we are strongly outperforming holding. The strategy return would have been 766%, and then the buy and hold return would have been about 50%. So we are strongly outperforming holding. Now, one thing to mention is that in TradingView, there's a slight problem with the percentages in terms of short and long because it's taking into account where we start, and we start with $1,000, but at some point we were down $4,000. So it's taking that into the performance summary, which is not correct. And same thing for all the other open trades. And then you can see the list trades one by one for each. So if we go through other examples really quickly, you can see, okay, this is for Polkadot, for example. Let's look at the chart first and then look at the signals. So as you can see for Polkadot, we had a short signal at 37, and then down there at 20, we closed the short but did not go long because we were not able to breach our long-term trend line. So this is why this line is very helpful, because even when you have bear market rallies, it won't always trigger long signals that might be false. So here we went short essentially Polkadot at 36 and then closed the short at 20, opened it again at 18, and then closed it down at 8. So this is visually how this indicator would look like for Polkadot. And then if we look at the backtest, the accuracy of the trade is very high for Polkadot, it's about 85%, but it's only 7 trades. But overall, we do outperform holding. Buy and hold would have given only 14% compared to our strategy, which would have given a lot more, 1,900%. And the longs and shorts have been performing pretty well for this coin. A few other examples before I go towards the mean reverting indicator. So this is for BNB, Binance Coin. We also outperform holding by quite a lot. And now this is a good example. This is for Terra Luna. So as you can see, by following a strategy like this, you could have entered Terra Luna around like below $10, and then here would have been a false signal. The loss would have been pretty minimal. And then here, that one was the big short signal before the big collapse of Terra Luna. So this helps you manage risk better. Of course, there's no strategy that's going to be perfect for all market conditions and all tokens. And that's why we are showing you the backtest, because we want you to look at the backtest and identify if the risks involved with this strategy fits your risk aversion. And if you want to reduce the risk, then we will give you an option to have your own stop losses strategy and where to put your stop losses. All right, so if we go through a couple other examples, so this is for Uniswap. We do outperform quant as well, not bad. We outperform holding. So this was for trend following strategies, and like I said, for this type of strategy, I would usually use daily to weekly. We will do more tutorials and guides because I want to explain very well to you guys what are the pros and cons of trend following strategies compared to mean reversion. Because like I said, no strategy is perfect. We need to understand exactly what are the risks involved by following the trend or by reverting that trend. So this was for the trend following component of our indicator. We know that a lot of our clients are traders and not really long-term investors. So as a trader, maybe you want to have more high frequency signals, maybe on an hourly or even on a 30-minute time frame. So we went ahead and developed a strategy for you guys that is much more high frequency, and we call it the mean reverting strategy. And I will show you guys here how the signals will get generated. So here I'm using hourly time frame, and as you can see, you get long and short signals that are in a very high frequency type manner, because we're using an hourly chart. So if you look a bit more in detail for Bitcoin, this is the type of signals that you can expect: a short at a relatively local top, and then a long at a bottom, and then a short here, long, short, long. So of course, nothing is perfect. We're going to get instances where, for example, we went short at 16.2 and then went long at 16.3. So here we would have had a loss on this specific signal. But that's why we want to show you the percent profitability of or accuracy of these type of strategies. So here I'm looking at an hourly time frame for Bitcoin. Let's hide this. So this would be the equity curve or the performance of this style of strategies with hourly trading. And as you can see here, we have over 400 trades because it's high frequency, and over the 400, we have around 70% accuracy. So that's pretty good. It usually tells you, okay, here's a local top, here's a local bottom, so you can work around with it. Let's just analyze the type of performances you can expect by following this type of strategy. So obviously, since it's a very high frequency, you're going to have a lot of trades. So personally, unless you are spending a lot of time on that screen or you have low trading fees on your exchanges, these are things you need to consider. Another thing you can do by using this indicator is just analyze where it's outputting a short and long signal. So that gives you a better idea on how to fix your positions. On an hourly time frame, you can see that the equity curve is pretty good. Max drawdown is only 2%, and the net profit is around 9%. So relatively, for a high frequency strategy, the performance is pretty good. And then we can see more into detail. If you were bought and held this coin at the same time we started the strategy, the coin would have been down 45%, but our strategy would have been up 9% without taking too much risk. As you can see here, the max drawdown is only 2%. So for this specific case, it was a very low risk and not bad return. For 10% return and only 2% drawdown, while holding the coin would have been down, especially if you look at if you were just along the token. As you can see here, our performance was much better than just holding. And that is also similar to other tokens. Now here, the profit factor is 1.4, which is really good. On other tokens, it might be less. For example, here it's 1.17. It's still relatively good. The percent accuracy is still pretty high, and max drawdown is pretty low. And then similarly, we can try this for a bunch of other tokens as well. Now, one thing I want to mention. So since this is high frequency strategy, we also want to give you guys the ability to do some changes so that you can fit this strategy to your own risk aversion, because maybe whoever developed the strategy or me likes to take more risk. So I want my stop losses to be big, but what if it doesn't fit your risk aversion? And we want your strategy to fit your preferences. So you have the ability to do some changes here. Now, one thing I want to mention is that you can also change the order size. So for example, here I'm saying that whenever I get a long signal, I want to invest my entire capital. And whenever I get a sell signal, I would sell everything. But we can change this. You can say that I want to invest 10% of my capital for each signal that I get. And then in that case, you can really see that you can improve your strategy a lot by just changing the bet sizing strategy. So instead of going all in on the first signal and all out on the one signal, you can choose, I will start investing 10% of my capital on the first signal. And that overall can really drastically improve the performance of your strategy. So for example, here, if we look at this strategy, we do 28% return with only 3% drawdown, while holding would have been down about 44%. This is how essentially it's going to look like. So as I mentioned, you have the trend following indicator for daily and weekly. And then we have a mean reverting indicator for hourly to 2 minutes. So I'm going to show you guys. This was for hourly. We did this performance for hourly. Now, what if I want to be even more in depth? Let's try 30 minutes. So even 30 minutes, you have a pretty good percent accuracy. The returns are a bit lower when you go a lower time frame, because you're trading a lot. But as long as our profit factor is good, is above 1, then that is good. But yeah, for me, I like to use this on an hourly basis, because if I'm using it on 15 minutes, it's going to trade a lot. And then you need to take into account trading costs and all that. And so this is the mean reverting aspect. And as I mentioned, we're going to do more videos and more articles on what are the pros and cons of these indicators, because I want to show you clearly that nothing is fully perfect for all market conditions. As you can see here, we got in a long signal on the mean reverting chart, but then when we had that breakout, it wasn't very good at adapting to that. So every strategy has pros and also has some cons. So I want you guys to be aware of all of that so that you can use it much better. All right, I think that's all I have in terms of presentation for TradingView Indicator.